Traditional strategies, they don't work anymore.
AI is making decisions faster than we can understand them.
Everyone's selling answers. Nobody has the truth.
Disruption isn't coming. It's already here.
Who's willing to cut through the bullshit?
Outwired.
Welcome everybody to another episode of Outwired. My name is Brian Fair with Insider Perks Model Campground with the esteemed Scott Barr from Ken Consulting. As always, we got a lot to talk about today, Scott. We're going to talk about a deep dive into marketing, starting kind of on a journey of like where marketing started with, like what I think the idea behind, like, because it interests me a little bit too. Maybe I haven't dived into this as much as I could, but briefly diving into like where marketing started at, and then how marketing has evolved. And I don't want to give away too much, right? I'm going to lean this in a specific direction, and some people will agree with me and some people won't. And then where we think not only is it going, but how you prepare execution-wise, like how do I execute where marketing is going in an age of AI, robotics, quantum computing, all the things that are coming, right? But specifically related to how that's going to impact outdoor hospitality. We'll touch on the experiences and niching down and all the things that we've talked about. I think that'll be a good conversation. We'll spend the majority of the show on that. Before we get there, we're going to talk a little about the AI bubble. And then we're going to talk a little about, like, obviously, we got to talk about some things that are happening in the economy, just to keep people up to date, because those things do impact all of us here, as much as we don't like to talk about those things. But first, what's on your desk, sir?
Yeah, I think, first and foremost was the press release today about that the RV retail registrations and where that's at, which is down 19% year over year.
Is this an indicator of just sales, or
it's registrations? Yeah, it is.
Not dealerships.
So it's not through no, it's through SSI does it, and it's through the states. They get those registrations. It's like from the state.
Okay, so these are a combination of dealerships and also people who are either renewing or not renewing their registration.
Correct. Yes.
Okay. Sorry.
So yeah, that and it's down double digits. Been down double digits every month this year. So it's essentially what that's saying, obviously, is the RV sector is struggling a bit right now. I would say struggling quite a bit. That the interest isn't there. The one thing I haven't seen are any numbers on rentals.
Well, let me ask you a question, because I don't want to keep interrupting you, but I just want to clarify for our audience, right? When you say interest isn't there, I don't think you mean interest in camping isn't there. I think you mean interest in purchasing a large discretionary purchase when I don't have any other money is there.
Correct.
So,
Yeah, it's that RV purchase, whether it's new or used. It just isn't happening. I
think we all agree that like interest in going camping, glamping, RVing, well, whatever, right, is not the thing that we're worried about.
Correct.
It's the ability of the people to actually execute on a purchase of that vacation.
That is correct. So, can you hang on just a second?
Yes, we can hang on just a second. I could just take care of your dogs. I hear them in the background. I can just fill it with filler content.
Yeah,
but
I'm the only one here.
It's okay, but we've seen that in commentary, and you'll see this from some of the other industry leaders. Go ahead, Scott. I'm just talking and filling time while you're gone. With other industry leaders, and KOA has come out and said this in a few different places from a few of their different leaderships, and we've heard this from other people who I have regular meetings with in the industry, that demand is not the issue. People want to go outside. They want to be outdoors. They want to connect with nature. They want to go camping. They want to relax. They want to de-stress. We had a gentleman on the show on Fireside Chat earlier today who runs a great retreat in Kentucky, overlooking beautiful cliff and beautiful sunsets. And he was just talking about how, he has a couple people who came and just kind of broke down in tears when they saw the view, and just because people just need that escape. So I don't think, as much as sometimes you could call us negative, even though we're really not, I'm not, at least. Maybe you are, Scott. But yeah, I'll let you speak for yourself in a second. Like, we're not negative. We're just trying to be realists. We're stepping back, looking at the numbers objectively and saying, what do we see? What is our takeaway? That doesn't mean we're right. Just we tend, at least I tend to go down rabbit holes and really research stuff before I talk about it educationally. And so I don't think there's any concern from any of the two people on this call, or really any of the people I've talked to generally, that there's a decrease in demand for the product that outdoor hospitality is offering. Now, that could fluctuate, like RVs might be down this year and glamping might be up this year, but generally people still want to get outside. It is really just a question of inflation is up, electricity is up, insurance is up, food prices is up. My insurance, I shared an article, like the Obamacare in the United States is supposed to go up double digits next year. Everything is up. And if I'm already underwater, if my personal savings rate was already 2.6% in the United States, if gas prices are skyrocketing, if all of that is leading downturn to more, at some point, I'm putting groceries on a credit card. What do I have left to go camping, right?
Exactly. And a lot of this, as you just outlined, is out of our control. A lot of these are external factors, as they say, and they have a big impact on us. So, that's kind of where we sit as of today. And you summed it up. And people want to go outside. They want to do these things. There's no question about that. It's do they have the means to do some of these things, such as RVing or purchase an RV, just due to the issue of the income, discretionary income, and the economy, how much money is left over at the end of the week.
Which I feel like it's a hard place to be, right? Like let's, and I know I keep interrupting you and saying I don't want to interrupt you, and then I interrupt you again. Just for the clarity of our audience, I'm not trying to be rude, I promise, but I'm just trying to clarify a couple things. Like, I think this is a hard pill for our industry to swallow, because, and we've talked about the history of the industry before and how they've built kind of the same campsites and been the same mindset, and they've never really been, I don't know, punch slapped in the face, whatever, by down economic times, because we were fine in 2008 and we were fine during COVID and so on and so forth, right? But in each of those scenarios, for various things that were slightly different, we as the industry had control over our outcome, right? Generally speaking.
Yep.
We had control over the products and services that we provided. We had control over the pricing. We had control over the product offering. We had control over whether we were niching down. We had control over the boomer market. It feels like that control is still, there's a baseline of that that's maybe lowered, but it feels like that control is slipping away. And what I mean by that is not that we still can't do all the things that I just talked about. It's that you can still do all those things, and then we'll talk about marketing later. And then what that ends up happening is like, if your customers still can't afford your product, even if it's cheaper, it's not within your control.
Right. Correct. And I feel like that's where we are right now. In speaking with some of the folks from the RV industry, they are kind of scrambling now to do some different things, to try to introduce some new innovations, to try to get units that people can afford and get out there on the road with. But it's hard. You can't just turn a manufacturing industry on a dime, and that it's going to take a little bit. And I think that sector is going to have to suffer through this a little bit before they see light on the other side, which hopefully will happen soon. But then again, too, numbers overall, I think the other numbers that came out from CampSpot today showed a relatively flat season so far, depending on where you're at, what type of campground you have. So there's that's kind of happening as well, which I don't think is surprising. We've been talking about this for months, that we'd be in much better shape if some of these things would have turned around, if we could have injected some more national optimism into things, here in the U.S. and Canada. Maybe I think your optimism is probably a little bit better than ours at this point, though. Both the U.S. and Canada lost in the World Cup, so there's that. That's gone. That optimism. That was a joke, by the way. No one laughed. And
They all laughed. You just couldn't hear them, Scott.
that's okay. Good. I'll hang my hat on that. But I did see that consumer confidence was up a little bit over last month, but still down compared to a year ago.
No, man, it was up. That's all you need to just stop there. Just stop there.
Okay.
0.3 percentage points, still at all-time second record lows, but up.
There was up. Yeah. So that means, sometimes when you hold true, when you hold that line, that is a victory. That can be a victory, those little victories sometimes.
If you go down far enough, there's only one place to go left, right?
It's called regression to the mean. So, yes. So there's a few of those factors going on out there. It'll be as the year progresses here and things, as people make adjustments, and this is where I'll inject a little bit of optimism into our conversation, is that over time, the longer things go on, two things happen. There's some people who are going to bail, and they're just not going to. They're like, I'm out, I'm done, I can't do it. But then there's other people who, over time, when they realize that maybe the relief they were hoping for isn't going to happen, that's when they start to make other adjustments to their plans. Some of these things that we've already seen and talked about a bunch, whether it's shortened booking windows, staying a lot closer to home, maybe downgrading the type of site they choose, maybe not, staying at a more rustic type of place instead of one with a lot of bells and whistles. So, those types of adjustments, I feel, have a lot of potential for the latter part of this season, like from now till maybe the mid-October. That if we see an uptick, I'll be really interested to see, and I'm going to ask you for the data on this, is that if we see any kind of uptick, what type of campground is it that sees that uptick? Because I throw $20 into a pool and say that I think that we might see an uptick, but it's going to be in the more bare bones types of campgrounds. State parks will probably do really well, I think, in this scenario. And I think that you'll see, again, campgrounds that maybe, have nice locations on, water and stuff like that, but maybe there's not a lot of extra there, so they don't charge quite as much, that people will make that decision. Because again, another part of it is I feel like people are not really requiring all that entertainment either. They want to relax. They want to just hang. They want to, as even the retirees that I spoke to a couple of weeks ago said, they just want to feel the vibe of the place. They said that they used vibe. So, but that to me is that where I feel like we're going to be, because as I always say, where I live, it's a very rural area. There's a lot of outdoor recreation here, and it's busy here. It is. It's busy. The campground I always talk about, that's right on the Androscoggin River, that does the river trips, 2 weekends in a row has sold out their tubes and their kayaks and canoes. None available, because they've been inundated with people, which means that their overflow into their campground is doing well too. So it's like for them, a place like that to be sold out, like for the weekend, I keep following them, and they're like, oh, we're sold out for the day, trips are done. And they have a lot. Anyway, that's just a way of saying people are here. They're coming up here. I would say it was busier this week than it was last week, right before the 4th of July. There's a lot of traffic. There's a lot of people. I've spoken with some folks here that, and I've spoken with some people who are vacationing up here too. They're like, yeah, we wanted to avoid the crowds on the 4th, so they're coming up here now. The weather's been great, so maybe we can salvage some of it this year. So I'll stop rambling.
No, I think that's part of the problem that makes this whatever we're talking about so hard to diagnose in the industry. And we started briefly having this conversation, even though we weren't talking about economics on MC Fireside Chats earlier. And it's what I've really come to believe is like we've talked about the K-shaped economy on our show before. I think the high-end glamping units are doing fine, arguably like up quite a bit macro level year over year, right? At least in revenue. And then down, I think at the bottom, the more affordable accommodations, not necessarily the lesser quality, but the more affordable accommodations are also doing fine. I think both those segments, like you said, may end up seeing a small uptick as gas prices either, well, temporarily come down. They're up 20 cents today because we're back on no friend status with Iran for at least a couple hours. But I think I think the middle is the issue. And I think the middle is where the majority of the chunk of private campgrounds live in the United States, is in that middle space. And those are the people that I'm really worried about, because those people then turn to, like we've seen a lot of consultants in this industry, a lot of architectural firms, a lot of banks, a lot of lenders, a lot of whatever jump full first into this glamping trend. And who knows how long that goes, right? But it keeps going up. And so that the perspective of those people is to tell the middle people who are calling them, maybe asking for advice, that everything's fine. Like, we're up. It's great. Just add glamping. It's fine. And I don't know that that's the advice that they need to hear. I'm not saying it's necessarily incorrect. It's just incomplete. And so it makes it really hard for you or I to get on a show, or for a consultant to answer a phone call, and they're not being misleading, right? They're just, again, it's not all the information, just like I'm sure we don't have all the information too. But I think that middle chunk of the industry really needs to figure out which direction you want to go. I don't think the middle of that industry is going to come back for quite some time. And I think they need to figure out, do I want to go not down in quality, but down in what I'm offering to make it more affordable and simplistic and easy and just nature, or do I want to try to go up and capture that high end of the market? I will tell you, my answer probably in February, January of this year would be go up. I think my answer now is go down. What is your answer?
I'm aligned with that. That again, just my focus group of 200 people, all RVers, all very experienced RVers. That's where they all were. These are people who typically stay at much higher end places, but they all were on board with kind of a little bit slower experience, a little bit less maybe, and just not having to spend as much for a lot that they didn't really need. So that, I mean, that was a prime example of that phenomenon right there. That they, and we see it. We've seen it in some of the research we've done the last couple months too. The idea of seeking campsites maybe at the same campground, but the ones that don't cost as much, or again finding a campground that has fewer amenities, where they can just kind of slow down and just hang out and pay less. So it's those combination of factors, and they've built up. By the way, there was a deer in our yard, which is why the dogs were going crazy. So
safe. It's okay. The dogs didn't.
They're inside. Yeah.
Oh.
They go crazy for everything. But yeah, it's to kind of build on what you said just a minute ago about where campgrounds stand in the whole scheme of things. Outside Magazine had an article this week written by someone about how it's like they're like, I'm over camping. I just want to go out and do whether trail running, hiking, or mountain biking, and then go stay in a nice place with a shower and all that. And I looked at it and I was like, have they never been to a campground that has a bathhouse or cabins or anything? But it was a younger person, and they fit that profile that we've been talking about for a couple of years now, of participating in outdoor recreation but not camping. And Anyway, I thought it was interesting that came from Outside Magazine, but it's all I wanted to do was contact this reporter and say, hey, you know, this isn't binary where you either sleep on the ground in the backcountry or you stay in a house. It's like there's a lot in between that might fulfill that and still allow you to have that outdoor experience, which for someone who enjoys outdoor recreation, that, you know, anyway, I thought of that as part of this whole phenomenon too, of why, you know, some people have moved a little bit away from, you know, the outdoor hospitality stuff, but because maybe we're just not getting across clearly enough what they, you know, what's available, what they can do. You know, it's like, again, you have to stay at an Airbnb. You can stay at a campground and have a really, you can either you get a unit, you know, get a cabin that has its own bathroom, or, you know, most of it, you know, stay at a place that has a bathhouse, and you can do everything that this person said was the advantage of staying in the Airbnb is right there, except you're still, you know, in an open air.
But I think that goes back to the issue of like, and we'll get to marketing in a second, right? But that goes back to how you present yourselves. We've had shows before where we talked about like, is a campground the actual future of camping, or is it a base camp? And I think that the perception that you put in someone's mind when you say campground, in many people who have not full-time RV'd or been in our industry for a long time, is
Right.
lower end. And then glamping is higher end. And so it almost begs the question of like, does this do, like, we basically have two paths, two roads we can take, and there are thousands of roads, right? But two roads on the macro level we could take as an industry. One is this continued push that we have toward higher end luxury, brand new developments, luxury glamping, the top of the K-shape, right? And this is being pushed not only by the fact that the audience has been there for the last 5 years and is still there, as long as the AI bubble doesn't crash and kill everyone's earnings, which we'll talk about in a second. But it's still there, right? And I think that has been exacerbated by private equity and investors coming into the business who have said, like, and again, nobody's saying there's anything wrong with the investors or private equity coming in. Obviously, that's debatable, right? But I'm not saying that. I'm saying that the result of those groups or types of people coming in is that we need to make higher returns on our investment every single year, which means that it only makes sense for us to go into higher margin accommodations, businesses, luxury RV resort, stuff like that. The margin could still be made for sure with the right thought and care and, you know, niche market targeting and things like that. Jeremy Johnson's a good example with his park in Michigan, which is, I don't know what to call it. It's for sure not lower end, right? More affordable, whatever you want to talk about it, right? But he's put thought and care into what he offers and the touches and things like that, and the way he markets it and talks about it and all the research he's done and things like that. And there are many, many other people like Jeremy around the United States and in Canada and in the world. But I just wonder, like, there's this kind of freeze frame of like that type of product, generally speaking, is harder for investors to come in because then you have to explain it to the investors. You can't just say like, look, here's a thing that looks like a hotel room that we've put up that has a bathroom in it that isn't really hotels, but like you can sort of understand, right? Like we're going to rent it for $300 or $500 a night or $700 a night or whatever else, and we're going to make this X dollar of profit on it. It's much harder to explain the business model of a campground like Jeremy's to an investor, you know, and thus harder to make your return on investment or recruit investors or things like that. Not impossible. And again, arguably, like, you should be more interested in a place like that because the future of that, I think, is brighter. But then the question is like, how does our industry muddle through that? Does that mean that if we have an AI bubble crash or a stock market crash for another reason, or crazy inflation that goes out of control, all things that are very much on the table for the next second half of this year and all of 2027 in my mind, and maybe beyond that, is there then a push back toward the median, and the median is in trouble, like we've already talked about, or is there a push continued toward the high end, and we're creating kind of our own glamping bubble, which I think will be there for a few years, right?
Mhm.
And will thrive, arguably can thrive as a glamping model for a few years, right? Or is there regression of the people who then say, I want to go into just more basic camping, but then don't have the thought leadership, the patience, the niche research, the market thinking, marketing, whatever else, right? To present a differentiated product. And so then we kind of regress as an industry back to where we were 20 years ago on a
Mm.
macro level. There's a lot. So I'll give it to you.
No, that it's going to. I wish, I had a crystal ball and could, see, where this is all heading. I mean, I have a hunch, and I think, what you're saying is as likely as anything that could happen. Because I agree that um, it's a much harder sell. It's a much more difficult to um, pitch that the idea of something that is more rustic, that you're like, this is not luxury, this is, because it's the bright shiny object that that people see, and that's what the investors see, that, oh, I can charge, 250 to $500 a night, um for this accommodation versus $60 for this. um it's it's a much more difficult sell that way, especially when they start to look at the bottom line and what's the profitability, and who is doing this, and it is one of the results of having more venture capitalists enter the market, more consolidation, where the demands for increased profitability and revenue are driving a lot of these decisions on how people are developing their campgrounds, instead of, like, Jeremy has stuck to his vision for that, and which is awesome. I mean, I think he has great ideas, and what he's doing. I think it's very successful where he's at in the Upper Peninsula, which is a beautiful place, and it fits with, again, that was his vision. That's what he wanted to do. But it's going to be difficult to just go out and find someone to invest in a property that uses that model in all likelihood, unless you really have everything really, really buttoned up well. So again, and just in my experience with the people I've been approached by, in terms of looking at investments and looking at development, it always leans toward the higher end development. It rarely, if you say, maybe you should just out of the gate here, start here. It's a slower build up. It's going to be, the revenue is not going to be as huge initially, but it's safer, and it's a good approach over time. Yeah, the banks and the investors are like, that's not good enough. It's not good enough.
Yeah, there's no patience.
No, it's this immediate gratification, versus historically, like you were just saying, whether it's 20 years ago or whatever, a lot of the mom and pops, that was that, they're like, well, we're in this for the long haul. We don't care. We want, this is what we want. This is the type of place we want to have, and that's what they built. It took them years and a long time to build it up and get what they wanted, but it was worth it, because that's what the market was like at that time.
Just researching right now to find out if we're right or wrong. It'll probably be wishy-washy.
That's all right. That's all right.
But I think this will lead us into the AI bubble, because, like, for those of you who watch this show, we've talked about AI quite a bit. It's a main focus of the show, although we've kind of been, I don't know if we want to call it distracted, but necessarily like pivoted over the last few, couple episodes, months, because of the conditions that have impacted oil prices and camping and the economy and all things that are not more important, but more timely, I guess, than AI. But I want to unpack a little bit about the AI bubble too, and we'll lead this conversation into it, because it does impact you guys quite a bit, significantly, even if it doesn't directly. Like, who cares if I'm not invested in the AI bubble? It's not going to do with me. And when I say AI bubble, I think I clarified it earlier on the show. Like I'm not saying the technology of AI is a bubble. I'm saying the companies that are basically propping up almost all the stock market are in a bubble. And we'll talk about that in a second. But so for those of you who are listening on the podcast, who can't see this, the question I asked Claude was, we talked about the macroeconomic outlook in some of our other conversations, just me and Claude, right? So I'm asking it to go through its memory, and I want you to solidify your research about this as well. If you look at where we could potentially go, higher oil prices, higher inflation, a potential AI bubble, everything else, and you were a campground owner who was developing a new property, what would you develop, high-end or more affordable, and why? And maybe it'll say middle ground, so it's apparently still researching. So I probably should have been fair and asked it the middle ground, but I feel like that's kind of the safe space. So we'll see what it says. But while we wait for that, like just explaining a little bit of my thesis on the AI bubble, and maybe I've told you about this, Scott, before, and we don't want to get into, like, again, I'm not an economics person. I'm not telling you how to invest or not invest, blah, 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 blah. This is not financial advice. Yada, yada, yada. Don't listen to me, right? Or whatever I got to say to you, don't listen to me. But if you look at the companies that are leading the AI space now, that are public companies already, Google, Apple's not really leading the AI space, but Google, Tesla, now SpaceX with XAI, Microsoft, those kinds of places. If you look at the bucket that those people have traditionally played in for all of their existence, it's been software as a service. And the idea behind software, the idea behind Google or Microsoft or HubSpot or pick a software, right? Adobe or Salesforce, is that once you pay millions of dollars or whatever it costs to develop the product, you get a new user, that new user pays you, you don't have to do anything except turn it on. There's no extra cost for you. And so those companies have traditionally been able to justify 20, 25, 30, even higher sometimes multipliers on their future revenue, because the investors look at, like, okay, we're not outlaying any capex to turn more users on. But now with AI, there's a couple things in place here, and you'll verify this stuff, like, because I don't want you to hear it from me. I talked to Scott about this before the show. Like, I think I would like to share a conversation with you in AI and go through how I would learn about something in the beginning, so we can kind of step through it together and you can understand the pieces and processes of the thing. But there's two things here, right? One is credits and AI. So one is, if you get a new user in AI, it's not free. You have to pay for the credits as part of the subscription that they're using and consuming in the data centers. So every new user you add is a new cost to you. So that's the number one problem, right? Whether it's a subscription or not, whether it's an API or not, like, it's not free. There's a cost to that to run the data center, and arguably, like, depending on who you believe, OpenAI is losing money on every customer, which is a big problem when you're trying to go after multiples or even build a profitable business, right? And then two is the fact that they're not actually software companies. So Google is in its core business, right? But they're a utility. They're building physical data centers. Like, that's never happened before with what Google and everybody else has done. And now that they're building physical data centers, the multiplier isn't there anymore. They're real estate utilities. And those trade traditionally at, like, I think a 10 to 12x, something like that. Which means these companies are way, 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 way overvalued. And what is the path to profitability? Again, not like AI is going to for sure eat the world, right? But, like, what is the path to these companies for getting trillions of dollars from AI when every new user you add costs you more money? Every new user you add requires you to build more capacity in a data center, et cetera, et cetera. So that's why I think we're in an AI bubble. I think it's just this feverish kind of crazy, just not going to end well for people. And it's holding up, like, a lot of the, again, we're not an economic podcast, right? But it's holding up a lot of the S&P 500 as these magnificent seven companies. And it's just, yeah, I don't know. Anyway, okay. Let's take a look at this. So I ran the current data because your scenario isn't hypothetical anymore. Most of it is happening as of this week. Here's where things actually stand, and then my committed answer. The macro is confirming the thesis in real time. So we talked about CPI, inflation, which is consumer product inflation, right, Scott? Hit 4.2% in May. So again, this is a lot of stuff. Like this is the In the Weeds podcast, right? If you're not familiar with consumer product inflation, it's generally speaking the amount of, again, macro level, not getting into deep dive stuff, right? Generally is the amount of costs that the economy costs more this year than it did last year, right? So let's just assume CPI was a loaf of bread. A loaf of bread costs 4.2% more this year than it did last year. But it's a bucket of absolutely everything: oil, gas, food, products, services, everything, right? All together, saying
Right.
that the general overall economy costs 4.2% more than it did last year. Now, that, like, tomatoes are up 40%. So it's an average or a median or whatever. I don't know. It's an average. I don't know what it is. Anyway, it's a middle ground. Do you know, Scott?
It's weighted
Okay,
based on
it's a middle-
volume.
Okay. So 4.2%. But then if you look at, and we briefly talked about this, like we talked about some of the numbers CampSpot put out today is on Michael Scheinman's LinkedIn account as CEO of CampSpot. And I replied to it, and I'm not saying that Michael is wrong. He's not wrong. It's actual data out of CampSpot, right? But there's a way that you can look at the numbers, and I think it was 1.23% up in revenue was the number. Scott, if you
It was
remember,
something like that. Yeah.
was
That sounds right.
the percentage increase in revenue year over year, same store sales, I think, whatever, right? But let's just hang on to that 1.23% number. If the economy has inflated its pricing by 4.2% and you're only up 1.23%, that means you're actually down 3% in the amount of things that you can buy: the electricity you can purchase, the insurance you can purchase, the camp store supplies you can purchase, the upgrades to your RV, the wages for people that you have to pay to clean. Like, you're down 3% year over year, which is no bueno. And we could have a much longer conversation if you're interested in some of that stuff. We have other previous episodes where we talked about wage inflation and the need to raise your prices and all that kind of stuff, right? But so that's why CPI should be so important to you. Is like it should be a floor, an absolute minimum floor of where you should be raising rates every year at. Like, forget your $2, $3. You should be raising your rate 4.2% at an absolute bare minimum, because if you don't, you are making less money this year than you did last year. Is that a good explanation?
That nails it. Absolutely.
All right,
That's
cool. Let's hope that we don't have too many of those explanations, or we'll never get through the show. But so the largest 12-month increase since 2023, with energy driving over 60% of that monthly gain. Energy is moderated a little bit now. It's back up a little bit this morning. We'll see where that trends out. The Fed is holding at 3.5 to 3.75% interest rates. There's a whole thing with treasuries too. The United States Treasury bond is right around almost 4.6% this morning, which feels like it doesn't impact you unless you own treasuries, except you understand that the 10-year mortgage is tied to that. So the higher the treasury yield moves, the higher generally mortgages move, which impacts the rate that people are in, a bunch of stuff, right? It's no bueno when it moves higher for the economy usually. And mortgage rates are back to 6.5%. Higher for longer is real. Oil has whipsawed violently. The Hormuz closure spiked Brent, et cetera, et cetera. Yesterday, they revoked the sanctions on Iranian crude, and there were more attacks over there, and Brent jumped 5%. The AI bubble isn't potential anymore. Late June saw the NASDAQ 100 shed over $1 trillion. It's still a bubble. But it started to show itself there. Oracle posted its worst week since the dot-com crash, and SpaceX lost $600 billion in 3 sessions, et cetera, et cetera. So let me argue the strongest case for the high end first, because it's generally good. Luxury has pricing power that value doesn't, right? This is some of what we talked about. Glamping ADR averaged $251 a night in 2025. I don't know if that's actually accurate. I don't have my numbers in front of me. Sounds about right. Like, I think the median of like a campground is 150 and a high end standalone is 350 or something like that. So right in the middle,
right. No, that seems about right. I think that's very reasonable.
Up 21% from 2023. That's the ability to pass inflation straight through. While a budget park eats rising steel, labor, and energy costs against the customer who fights every dollar of increase. The K economy is structural, not cyclical. The top 10% now drive 50% of all consumer spending, and households over $150,000. Earning income are largely insulated by home equity and stock gains, actively spending on premium experiences. Marquee adjacent scarcity commands durable premiums, et cetera, et cetera. Okay. But here's what breaks the case, and it's the crux. The high-end camping thesis in 2026 is a levered bet on asset prices. Okay, real estate, stocks, physical assets, right? Commodities. The top domicile isn't spending resilient wage income, it's spending the wealth effect. TD Economics is explicit that premium resilience holds unless there's a steep correction in the stock market or a sharp downturn in the job market, both of which we've explored on the show before. Yes.
Yeah. Yeah.
An AI-led equity drawdown of the magnitude now in play is precisely the thing that reverses the wealth effect and the confidence to book a $300 a night celebration. You'd be building the most capital-intensive, highest operating leverage product, financed at 6.5%, whose demand is most tightly coupled to the exact catalyst you're worried about. And the warning signs are already in the segment. Tenter collapse after 1,000 franchise locations. Does it really have 1,000? That feels like a lot.
Yeah. Yeah.
Saturation is setting in at popular spots, and you'd now be competing against Marriott, Hyatt, and Hilton, who all bought their way in with loyalty program muscle. Meanwhile, the value mid-customer gets squeezed on the margin. The camping superpower in a downturn is trade-down substitution. The incremental camper in a recession is someone who canceled a flight, cruise, or hotel and drove instead. That's already visible in your own industry. RVIA credit forecast 2026 to 314,000 units, down 8.2%, citing tightening household budgets and consumers delaying discretionary purchases. So what I would build, not pure luxury and not commodity budget, the resilient value premium brand, a cabin cottage forward near metro 4-season park with a rich amenity stack, Starlink co-working and programming, and a small premium halo of 4 to 6 differentiated units rather than a whole luxury resort. The reasoning is that it captures the trade-down tailwind, sits on a large inelastic base, and the tiebreaker in a higher for longer world. Costs a fraction of the capital, so the debt service survives a bad year, and you can reprice down without going underwater. Cabins matter specifically for your geography. I don't know what my geography is, but it seems to think it knows. Insulated fixed structures run, Calgary, there we go. Okay. Near metro matters. Under canvas. Okay, so commit in a scenario frame. That flips me. Okay. But all right, but listen. It's not for me. I'm asking macro for the United States and Canada market overall. Generally speaking, comma, middle class is going away because of the K-shaped economy. Is that a fair statement?
Mm-hmm.
Just redirect this thing. Calgary. And then we'll see what it says. I should probably turn down the thinking limits a little bit, so faster next time. But yeah, I think my thinking here is what we've talked about multiple times, is that if you are able to build a truly niche experience that is able to be more affordable both to build and then thus to price to the consumer, right?
Mm-hmm.
Then you have created, like we talked about the RV sites multiple times on both MC Fireside Chats and here, that they do it a little bit differently in Europe, right? If you don't have to pour the $60,000 to $80,000 site with concrete pads and patio furniture and all the nice stuff, right? If you can just cut that cost down to $10,000 to $20,000, and maybe not everybody has full hookups because you don't have a giant rig, you don't have a concrete pad and things like that, then that site all of a sudden starts to look a little bit like the middle. But if you can differentiate those sites a little bit through affordable options like landscaping or privacy trees or things like that, right? And then again, I don't know that I'm talking about RV sites here. I'm talking about camper van, sprinter sites, right? Class C's, or like accommodations like, glamping or things like that. I think that's your real opportunity. What do you think?
Yeah. No, I like that idea. We did talk about that last week. The idea of sites that are really nice, but they just don't have that kind of cost associated with them. It's almost like people's thinking is so locked in on some of this stuff. They're not really considering that you can really decrease your site development costs and actually end up making more money at the end of the day if you just get a little creative. Like you mentioned, the landscaping, and I know Simon and some of the other folks that we've talked to in the past have showed us the pictures of some of these places in Europe that it's like they're beautiful places. They're just they put some thought into the design and landscaping, and it's not just a bunch of concrete pads with hookups.
All right, so we've got a you're right, and it's a fair hit on what I said. Build for the resilient middle is the department store trap. That's exactly the position that dies in a barbell economy. Sears, JCPenney, mid-tier, Macy's, mid-price, mid-quality, no distinct identity. Squeezed from both sides. So let me drop the hedge and give you the general market call. First one distinction that matters because it's where I was sloppy. A middle price point is not the same as a middle class customer. The thing that dies is the undifferentiated middle product, which is true, right?
Mm-hmm.
Costco isn't a middle market. It's where the affluent value seeker and the stretched but aspirational shopper both land on the same SKU, and it's comping 22% plus in this exact economy. That's a barbell capture business wearing a middle price tag. So the question isn't middle versus end, it's which end you anchor to and whether your product has enough identity to pull customers from the other leg. Now, the strongest case against Wormelbach land is the case for going pure luxury. Travel and recreation is the single most resilient spending category in both countries right now. And in both, it's explicitly the high-income household that's keeping it afloat. Travel and recreation remain the most resilient categories, with higher income households the primary engine keeping Canadian spending afloat in early 2026. Glamping has proven pricing power that value has none of. ADR plus 21% in 2 years. And the top leg share is what's growing. If you believe the K is permanent, I don't believe that. Do you believe that, Scott?
Mm-mm.
The clean move is to plant your flag at the top, serve the people with money, and let the bottom rot. Feels cold. Not my words.
Toodaloo.
That's
Yeah.
a coherent, defensible strategy, and I want to give it full weight. Here's why I don't think it's the right general call in the specific macro you named. And again, as we go through this is macro, to be clear. We're not
Right.
talking about micro. Every situation is different. Every property is different. Near what market, what outdoor feature are you on a river, off a river, near a city or not near a city or whatever, right? So there's not like the definitive judgment call on every single person. The luxury camping thesis in 2026 is a leverage bet on asset prices. We talked about that before. We don't need to go through this whole thing again, right? But the AI bubble burst is one catalyst that reaches directly into cohort paper wealth, and we'll unpack that in a minute. So the general call for the U.S. Canadian broadly non-scarcity, anchor to the top edge of the value band, not ultra luxury and not bottom budget. The move is to ride the top leg down, capture the affluent household trading down within the experience category. The family that did a $600 resort now does a $150 differentiated cabin, plus the value seeker trading up. Camping is already the natural trade down destination from hotels, flights, and cruises. So in a hollowing middle scenario, the incremental customer is a down trader with more money than the budget base and more price sensitivity than the luxury base. That's premium value, enough differentiation and amenity to hold pricing power, accessible enough to catch down traders, unlike ultra luxury, and moderate rather than extreme capital so that survives a bad year. Et cetera, et cetera. US Canadian split. We're not going to go all this. Okay. Okay, so any questions on that, Scott, before we keep going?
No, it makes sense. There's a lot in there to unpack in terms of positioning and stuff like that, but I'll save it. It's just a distraction right now.
Okay, so I said explain in plain English, and then tell me why I should care about an AI bubble when I run a campground. That's what we're asking now. Because I think the thesis is important, especially for the higher end, right?
Mm-hmm.
As we waited to. But this is going to impact a lot of people's 401k, things like that too. You didn't invest in SpaceX, did you?
What was that?
Did you invest in SpaceX?
Did I?
Yeah.
No.
Good. Do it, but wait until it collapses. It's going to collapse.
Okay.
Not collapse like to zero. I think it gets under 100 by the end of this year, early 2027.
Oh, okay. Well, let's document that. Let's see. Yeah.
Yeah. So by the end of the first quarter of 2027, I think it's under 100. At some point, there will be a buying option. And then I think like long-term hold 20 years because we're going to Mars. Elon's timelines are always off, but usually never. It's fair plain English. Here's the whole thing in one sentence. The AI bubble matters to you because the people who fill your nicest sites, this is not just glamping, right? This is higher end luxury sites. This is the
Yep.
patio sites that you poured, the class A's. This is all like, this is not ultra luxury people. This is the class A people that most of the, you would call them higher mid-tier campgrounds rely on. The people who fill your nicest sites are the same people whose spending is propped up by the stock market. And right now, the stock market is basically a handful of AI companies in a trench coat. Walk the chain. Over the past year, AI-related stocks drove something like 80% of the entire stock market's gains. At the same time, the top 10% of earners now account for roughly half of all consumer spending in the United States. Those two facts are the same people. The household booking your $250 glamping cabin or your premium pull-through isn't spending because their paycheck went up. They're spending because their portfolio and their house are up, and they feel rich. That feeling is the fuel. Kill the AI stocks, and the market drops 30%, and that family doesn't feel poor exactly, but they get cautious. And the very first thing a cautious person cuts is the discretionary trip. Your $250 cabin becomes a $60 tent site, or the weekend just doesn't happen. Or it becomes a $125 cabin, right? Like something in the middle, right?
Yeah.
So you don't need to give a damn about AI, the technology, this AI speaking. You need to care about AI, the stock market prop, because that prop is holding up the spending of the exact customer your best margins depend on. And it hits you a second way too in financing. Say you want to build a new loop or buy a park, you borrow to do it. An AI crash doesn't make that easier. Either it comes wrapped in the inflation we've already got, so the Fed keeps rates high and your construction loan stays expensive, or it spooks the banks and they get stingy lending to risky hospitality projects. Either way, your money gets more expensive right when you're trying to spend it. And now the part that actually makes this useful instead of just scary, a crash isn't all downside for camping. It decides which end of the business wins. And then those affluent people get cautious. They don't stop taking vacations. They trade down. But where can they trade down to is the question. Because let's say you're an affluent person who enjoys nature and the outdoors and has been going glamping for 2 to 5 years. In no circumstance, I don't care what kind of bullshit you want to throw at me. And you can try to prove me wrong if you think I'm wrong with that. There is no situation where that person who's like, I feel less wealthy. I just can't take that $250 a night cabin vacation anymore. But you know what? Buying a $100,000 RV to go camping in a cheaper site sounds like a great idea. No. That right? Am I wrong, Scott?
No, you're not wrong.
Okay.
You're not
So
wrong.
showing
No.
on people to trade down to RVs is the most silly thing I've ever heard in my life, which means that they're going to either trade down to cheaper cabins, which will be the first step, or they're going to trade down to state parks and BLM land.
Right. If someone's making that kind of trade-off already, most people are smart enough to know that, regardless of what you're doing, it's like it's a lot more expensive. It's just a lot more expensive, and that's just the calculus of the situation. So that someone's not going to do that. That's not going to happen.
Well, and we had I think it was Zach on our podcast earlier on Fireside Chats. He was talking about how there are a segment of the population, and he didn't give numbers, and I don't know how wide he was pulling from. Maybe it was just offhand. Maybe he had a lot of data. I don't know. We didn't follow up. We weren't talking about this on the show. But he said there's been a lot of people that he's aware of that are trying to sell their RVs from during COVID and then still want to go RVing, but are now renting. Well, the problem with the rental market is that if you're a renter, you're not all in. You no longer are permanent camper, it's part of the lifestyle. Like maybe you go the same amount of time initially, but it's a whole lot easier for you to cut camping than it is if you own a rig, right?
Mm-hmm.
So you're not married to the lifestyle, which I think puts us almost in a more dangerous place. If people are trading down by selling their rigs and then renting, we've already talked about the high cost of rental market, by the way, but because you still have to rent the stuff and then you start to put a diesel in, whatever that cost is. But so I
Right.
don't know.
Yeah. I mean, the RV purchase is a long-term commitment, and as you said, lifestyle. It's like it's that kind of commitment. And when people do the anyway, they do the overall calculus on and balance between lifestyle and costs, then you know that, and I think that's why we're seeing what we're seeing right now.
So I said, so I don't know if you have if you have a clear answer in plain English, what do I build for a 20-year stable future? I'm interested to see what this thing says. I took down the thinking, so hopefully it will go quickly. And then we'll move into like a little bit of marketing, I think, if that's okay with you. While we're waiting on the answer, I think there's a couple of things we should just touch on briefly from the economy. I don't think we have any new inflation numbers that I'm aware of off the top of my
I
head.
haven't seen any.
For those of you who don't pay attention and probably have better mental health than I do, the Iran war is on again, but not on again. And so we've apparently, Mr. Trump bombed 80 different places in Iran last night, revoked the oil sanctions in return for what he says. Well, what happened was Iran attacked 3 ships, in not Navy ships, 3 commercial ships in the Strait of Hormuz, and we're not going to get into the semantics of that, right? But in return for attacking 3 ships, Mr. Trump bombed 80 places, revoked their oil sanctions, and basically the memorandum of misunderstanding, which I'm just going to call it now, he said that's basically completely dead. Iran said the same thing from their news agency. And so now we're kind of waiting to see what happens now. And also the United States decided to drop all these bombs during the funeral of the supreme leader, which we assassinated. Doesn't feel like this is the same kind of escalation. And so then oil is up, I think, 4, 5, 6%, something like that. It's been fluctuating up and down throughout the day. Gasoline prices are up 20 cents again. Let's go fill up your tank real quick. Maybe this is just a day pop like it has been in the past. Maybe it's not. Doesn't feel like it is. See what happens. I think we're probably figuring out what's happening right now in real time, but I'm not like an expert in the show. So that's what that is. Okay. So here's the clear answer: no hedging. For a 20-year hold, you don't build a tier, you build a location and a chassis that can be any tier. Then you put a mix on top. Stability over 2 decades doesn't come from guessing whether the economy is rich, poor, or scared in any given year. You'll be wrong half the time. It comes from owning something that pays in all 3. Break into what's permanent versus what's just noise. The noise is everything we've been talking about. The bubble, the oil spike, this year's K-shaped snapshot. Those flip every few years. I don't know if I agree with that. I think that's generally speaking true, but I don't know if this one's going to flip. What do you think?
Yeah, I don't think so.
Okay. You cannot build a 20-year asset around a 2026 headline. The permanent stuff, things that will still be true in 2024, 2045. The land is the asset. Everything on top of it depreciates. Well-located dirt, close enough to a major metro that people can drive to on a tank of gas with a real natural draw and water if you can get it. Appreciates for 20 years no matter what our economy does. You know, we're going to go down a rabbit hole again for 10 seconds and I'm going to stop. Did you read about what's happening in China's real estate market?
No, I didn't see that.
China's real estate market was one of the highest growth engines for the last 20 plus years. And they basically cut out all the speculation and it's collapsed now.
Oh.
And the government has basically said real estate isn't for speculation. It's for living in houses, which is true.
Right.
There's a fascinating rabbit hole you can go down about how home prices were actually stable for like 100 plus years or for all of eternity asset wise until like the mid 1990s to 1997 when we did a bunch of stuff with regulations and allowing investors to come in and basically like turn them into appreciating assets, which drove home prices up ridiculously high. And now people can't afford houses and a whole bunch of fun stuff like that. But anyway, so That's, I don't know. I probably should get a life at some point, Scott. But the permanent stuff, the land is an actual asset near a metro, appreciates for 20 years. They're not making more of it. Tents, cabins, hookups, amenities, all of that wears out, gets swapped. The location is the moat. If you take one thing from this whole conversation, it's that a mediocre operation on great scarce land beats a great operation on forgettable land every single year for 2 decades. Do you agree with that?
I don't know. I'd have to ponder that a little bit. Because
I think, go ahead, you first.
I was just going to say, it's like, you know, there's something there other than, I mean, I understand what Claude's saying about the land and how important it is, but when you think of it from a business perspective, it's like what you're doing on top of that is really important, because other than that, it's just there.
Yeah, I mean, there's a couple things here. One is like when you first, a little like 10-second primer on AI. When you ask AI questions, generally speaking, it's going to go out and search the internet, regurgitate all the shit that everybody else has already said in articles and blogs all over the place, right? If you really want to get AI's own internal thinking, tell it don't search and use your own internal thinking. And then you'll get a little bit better answer out of it with the intelligence that it's meant to have, right? So it's regurgitating a lot of what experts have already, said out there. I think it's interesting to me, like, there's a couple things here. Well-located dirt, for me, is a toss-up, just like guessing the economy is. Right now, super important. For the next 10 years, probably super important. But then you have potentially, as we've talked about on the show before, the disbursement from cities, because you have self-driving cars, you have flying cars, everything else like that. The ability of people to spread out more and to live in more remote areas and still be able to commute or get where they need to go. And then 2 is the flying cars themselves, which is the ability for people like, now I'm in a city, I can take a flying car out, or I'm wherever I live, and I can get to places that previously were 2, 3, 4 hours away in 30 minutes, which changes the importance of well-located dirt. So my definition of well-located dirt is, for sure, like, if you have the ability to go near a city, like Chicago's not going anywhere, right? It's not going whatever. So if you have the ability to do that, that's a checkbox. I would consider the definition of well-located dirt on a river, on a lake, underneath trees, by cliffs or caves or hiking trails or nature, or right, stuff like that is what I would consider the definition of well-located dirt. And then the last question is, if you take one thing, a mediocre operation on great scarce land can be strong, I think, right? The evidence proves that that is true.
Yep.
But I don't believe it beats a great operation on forgettable land. You know what? Maybe I do. Maybe I do, now that I'm reading that, right? Because it's saying a great operation on forgettable land, which could be 2 things. Land that is by its very nature forgettable because it's not near a river or a mountain or whatever, right? Or 2, it could be forgettable because you suck at landscaping and design, right?
Right.
So if it truly is forgettable land and you're in outdoor hospitality, I don't even know that it's possible to create a great operation. Unless the focus of your business is not actually outdoor hospitality, it's entertainment. Like, let's take a Yogi Berra Jellystone Park, for example, right? And then you can build a great operation on forgettable land. But to me, I don't even know if I would call Jellystone outdoor hospitality. I'm going to get like so many emails about that, right? What do you think?
I think it fits the definition of outdoor hospitality. It's within the spectrum of what is out there, in my view. So I feel my bias is toward the idea that good management, good service, good whatever you're doing, if you do it really well, it can overcome a lot of warts, much more so. And the other side of that too is, if you have the best location in the world and you're a total dipshit, it's not going to work. It's so it's that's my very analytical bias. But
To be clear, I'm not slighting Jellystone at all when I say that, right? I'm just saying I think it's a different type of customer than an outdoor hospitality customer as we generally think of it. Like the person who's coming to most Jellystones is not there for the nature. Generally, macro level speaking, right?
they're there
Is
because
that
of
fair?
amenities and entertainment. Yeah.
Yeah. Which is, again, that's fine because you still want those amenities and entertainment to be outside. There's nothing wrong with that. Cabins are in the woods, et cetera, et cetera. Your kids are outside playing instead of indoors. Like, that's all good things that are positive for the mental health of children and blah, 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 right? Nobody, and I'm not slighting Jellystone when I say that. I'm just saying that the general meaning of like what I would consider outdoor hospitality, and I'm not saying I'm right, it's just my opinion, is that you are outdoors in nature to be able to connect with nature, which I guess isn't the industry definition, but I don't know. I think it's those properties that connect with nature that thrive in the next 20 years. So, okay, build the infrastructure to serve every price point and then flex the mix instead of rebuilding. Overspec the bones, powerful hookups, all season utilities, real connectivity. Once the chassis can support both a $60 site and a $250 cabin, you decide the mix year to year based on which way the economy tips. That's interesting, especially if the cabins are on wheels. Good years, you lean into premium cabins for the people with money. Scared years, you lean into value sites for the flood of people trading down and out of hotels and flights. It would be so interesting if you could build, if you could somehow build, and I'm sure these exist, right? Like a completely self-contained cabin that was on wheels that could just hook up to the water and power, but somehow had sewer, like almost like an RV Blackwater tank in it, right?
Mm-hmm.
Or something like that. Then you really could have like a hybrid, like I'm just going to wheel a cabin onto it this weekend because there's more demand. I'm going to pull one out of my storage. But during the weekend, I'm going to focus more on long-term RVers or tent campers or whatever else, right?
Right. Use your demand model that whatever your reservations are coming through, and then you convert those sites. I actually love that idea. I think that would be brilliant if you could pull that off. I think that would be absolutely brilliant.
I bet you could with the robots. So just instruct the robot in like 10 years, right? Or like get on the tractor, or that just tell the tractor, just like ping the tractor on WhatsApp and talk to it because it'll be AI controlled. Be like, go pull me out the thing. Good usually leaning to premium cabins, scared usually needs value sites. Okay. That way you stop having to predict the future, you build so you don't have to. Own both legs of the KN1 property, a solid base of value RV sites. That's your recession floor. The volume fills up because times are bad and people are trading down into camping. Plus a differentiated premium layer, cabins, better units. That's your margin in the good years and catch for the influence. Name it the millennial Gen Z camper. We've already talked about that. What to avoid, all in on luxury, et cetera, et cetera. Okay. So plain and file, buy the best located land you can afford, put bulletproof all-season infrastructure in the ground, build a value base with a premium layer on top, and point the whole thing at the experiential younger camper and build an experience. Build something that differentiates. Do that plan?
Yep.
All right, should we finally get to marketing now?
Oh, let's talk about marketing. Okay.
I'm so happy.
I'm teasing because I know.
What's your view of marketing in the industry so far, generally from a 20,000-foot macro view?
If I had to sum up marketing in the industry overall, I would say it's still in general, again, that very macro view. I don't feel like it's super sophisticated. It's still a little too transactional. I don't feel like it's overall, it's been super effective in being able to communicate to guests what exactly it is they're going to get and what they're going to experience and how to actually get them to book. So a little critical, sure, but it's better than some other industries too, though. So I've worked with a lot of different sectors of this industry and others as well. So the fact that in our industry we are still fairly focused on the guest experience, I would say in general, we're getting there. I think it's a lot. I mean, when I first started working in this industry, it is light years ahead of that. So it's come a long way overall. That what I see, and there's a lot of folks, yourself included, that are bringing a lot of the new technology and a lot different ways of getting to the guest and providing those back end analytics and the targeting is it really has improved a lot.
Okay. So we're gonna look at this first off. So like I'm gonna walk you through this. This is how and I've never done this before, but like how I would learn about something, right? So marketing, I said, tell me where marketing started, like all the way back at the beginning, way back before large companies and marketing professionals took over. The basics and necessities of what the word originally meant before I said world existed, but hopefully a thick word out of that. Marketing stripped all the way down isn't a business function at all. It's a word about a place. And underneath that, about a very old human necessity. Let me walk it backward. The word itself, marketing, is just the gerund of to market, the act of going to market. In that literal sense, it shows up in English around the 1560s and means nothing more than the buying and selling you do at a market. Hauling your eggs and wool into town on market day and coming home with coin or someone else's goods. That's the whole meaning for roughly 3 centuries. The modern sense, the commercial discipline of promotion, advertising, and moving goods from producer to consumer, is a late graft, an American coinage that only takes hold around the turn of the 20th century. So for most of its life, the word had zero to do with campaigns, funnels, or brands. It meant errands. The root under the word market comes from, okay, we don't need to know all that stuff. The institution the word describes, before it was a word, it was a physical thing, a cleared space where people who didn't otherwise know or trust each other could meet to exchange. The Greek agora, the Roman forum, the Mesopotamian trading quarter, the bazaar, the souk, the medieval market cross where the Lord granted a charter to hold a market on a given day. These are among the oldest civic institutions humans built. The market was a truce zone, a place where the normal rules of your stranger, therefore a threat, were suspended long enough to swap goods. That social technology is arguably older than money and older than writing. The necessity underneath it all, here's the primal layer you're asking for. Marketing requires exactly 2 things to exist, and neither has anything to do with companies. First is a surplus. You have more of something than you need. So this includes services, right? Or whatever you have today.
Yep.
No surplus, no trade. You just consume what you make. Second is a way to make a stranger want what you have. This is the real seed. The moment you carry surplus to a place full of strangers, you face a problem that no amount of surplus solves on its own. Nobody knows your goods are good. So you signal. You arrange the fruit so the ripe ones show. You call out your price. You let people smell the bread. You put your maker's mark on the pot. And that maker's mark, stamped in Mesopotamian clay and Roman pottery thousands of years ago, is the true ancestor of the brand, a symbol that says this came from me, and mine is worth trusting. The English word brand is unrelated in origin. It's a burning, a mark seared into livestock, but conveyed the same idea, a sign of origin and ownership. That's why Mercury became god of both trade and messengers as the perfect fossil. Marketing at the bedrock is the communication half of exchange. Trade is the swap. Marketing is everything you do to make the swap happen, to be seen, trusted, chosen over the stall next to you. It's persuasion in service of transaction, and it's as old as the first person who shouted about their catch instead of waiting silently for a buyer. One obvious caveat is et cetera, et cetera. Okay. All right. So then my question here is like, okay. So at what point do you feel, if it is true, that marketing became manipulation? This is what interests me. Okay. And maybe I'm wrong. Maybe AI is going to come back and be like, it never did. Okay. But I think there was a point in time, and I'm guessing probably somewhere around the late 1800s, early 1900s, where marketing as a necessity, like there was always brand, as it said, right? There was always a need to showcase the quality of your product. And there were always a certain amount of people who manipulated, right? Push the
Right.
right fruit to the front or the expiring milk to the front or whatever else, right? But I think as we moved in throughout the 19th century and into the, the 20th century into the 21st, whatever, I think I want to just scroll this up as we see in a second. I think there's been a consequence of the necessity to continue improving margins and profits at the behest of companies who exist in the stock market or need to satisfy investors or whatever it may be, right?
Mm-hmm.
We constantly, not willingly or maliciously manipulate in many cases, some cases for sure, right? But most people I don't think are intentionally manipulating, but they are in so ways as like, and I don't, and I'm not, I don't intend on, I don't have any good examples from the campground industry specifically, but just, I think there's been this focus on, I don't, and I'm speaking from a 30,000 foot view, not about all campground owners or even most campground owners, right? A very small proportion amount, perhaps. Although I guess more with marketing, right? But again, nobody's, I'm not accusing anybody doing this maliciously. But there's been this, I just need you to sell campsites. I just need you to sell RV sites. I don't care how you do it. I don't care what you do. I don't care whether you run Google Ads or social media or what you say or how you say it, or if you doctor the photos or if you crop them, or if you spin the narrative, or if you only handpick the good reviews to share with people, or you design me a website that over promises and under delivers on the product, or you don't set the appropriate expectations or whatever else. And this is not just unique to campgrounds, right? To be clear. But I think this has been pervasive in an industry for 150 years and it's, to be clear, in all of time and space, it's new in 150 years, right? I think there is a incorrect path that marketing has diverged onto that has removed the accountability for some products and services to actually be good, and has created an environment where, let's just take, I don't know, something like high fructose corn syrup or whatever else, right? Where you can push this mediocre product out at mass scale because it's cheap. And if you have enough money to spend on TV and radio and internet ads, the general public just, it's good. It's the thing. We all buy whatever, right?
Yep.
So what do you think about that first? Am I way off base?
No, nope. I think that it. What I was thinking of when you were giving that example too is, from what I heard from a lot of RVers, is that they have learned to not trust the pictures they see of the campgrounds and the campsites. That they feel like they have been manipulated because of the pictures are taken at a certain time. They're taken at a certain time of year. They're not giving the full picture of the campground and the campsite experience. So, that's part of that whole manipulation thing you were talking about, and I don't think anyone says, let's manipulate people, but they're like, well, we want really good pictures of our campground and our campsites on our site. So there's this gap there in some cases where people feel a little bit manipulated, but the intent was never there. The marketing was, we're going to show you the best side of this that we possibly can.
Just change the prompt here for a second. I don't even want to read what it said because I don't think I gave it enough clarity after we had that conversation. But yeah, I mean, this is my thing. Like, I mean, if you go onto social media, and we are in outdoor hospitality, right?
Yep.
Go onto social media. I mean, every single campground has the best RV site with the best view, with the best amenities, with the best proximity to local attractions, and the best this and the best that. And we have the best cabins with the best amenities and the most luxurious thing and the most, right? Like over and over. They can't all be right. It's like the best cup of coffee in Seinfeld, right?
Right. Yep.
It,
Yep.
it can't all be the best cup of coffee. And so I think at some point, this has and continues to do a disservice to the industry, because the person who then is differentiating their product still can do that, because then it's easy to see the differentiation in the photos and the website content and all that stuff. But it almost becomes harder to stand up through all the noise when everybody else, oh, there's somebody else is claiming they have the best this. Well, I went to the best before and it was, right? And I don't know if there's a way to fix that as long as the profession of marketing currently exists as constructed. Because
Right.
if you want marketing, what you're really saying in 2026, if you want marketing, is I want to hire somebody to come into my office or work from home or whatever else. And all I want them to do is take my existing product as it is and shove it in front of as many people as possible and make me more money. That's it. That's generally the school of thought around marketing. I don't want my marketing person, again, macro level, there are exceptions to this. I don't want my marketing person to tell me that my product needs to be improved. Stay in your lane. You're just a marketer, right?
Right. Right. Yep.
I want you to just sell. And if you can't sell because maybe my product sucks or I haven't differentiated it around the same as everybody else or whatever else, you can't do that, you're fired. So you don't have control over the thing you need to control to improve the experience, which is something that you can then turn around and actually market because someone really truly wants that because it's differentiated. So your hands are tied. It's almost like marketing is lose-lose from the beginning. What do you think?
Yeah. I mean I mean that makes sense, because that's what it is. That's what's going on. Currently in most industries, honestly, it is the state of marketing, as you said, in 2026.
Okay. So here's the answer to this. The strongest thing I can say about your premise first, there was probably never a clean moment when marketing became manipulation, because the two were never separable. The vendor putting the right fruit on top, the maker's mark as borrowed trust. Medieval puffery, selective presentation is baked into persuasion from the start. So the honest reframe is that manipulation was always latent in marketing, and what actually changed over time isn't its nature, but the disappearance of the thing that used to keep it in check. Hold that, because it changes where you point. Here's the mechanism underneath your question. Manipulation gets structurally favored without anyone choosing it the moment that two separations happen. The person presenting the product gets divorced from the person making it, what we just talked about, right? The marketing person is divorced from the person making it. And the reward for presenting it gets divorced from whether the product is actually good. Just said that, right? Didn't we?
Yep. Yep.
Wherever both are true, capital and effort flow toward looking better rather than being better, because that's simply the shorter, cheaper path to the same sale. No villain required, just incentives with the brakes removed. With that lens, there are three distinct becomings, and they answer slightly different versions of your question. In the 1880s and 1900s was the accountability brake. This one fits the not intentionally. Mass production created surplus at continental scale, and railroads let you sell to strangers 1,000 miles away. That quietly killed the mechanism that had disciplined honesty for all of prior history. The shopkeeper who vouched for goods, the repeat relationship, the small world reputation that made lying self-defeating. The brand now had to do the trust work the shopkeeper used to do, but with no individual repeat accountability behind it. Nobody decided to be manipulative, which is what we said, and one or two people did, right? But so the predator that used to eat exaggeration just went extinct with distance. Patent medicine is the smoking gun of the era. Products that did nothing, sold on pure emotional persuasion, because there was literally no product to improve. The entire value was the presentation. That's your show me the best side versus make it better in its purest early form, and it emerged from structure and not malice. In the 1920s was the intentional codification. This is where I have to break with your framing because it was intentional. Bernays, Propaganda 1928, and Hopkins in Scientific Advertising 1923, the explicit theory shifts from inform about the product's function to engineer the desire and attach the product to it. Sell what the cigarette symbolizes and not what it does. This wasn't pressure, it was a craft, deliberately built. So if your real interest is the unintentional drift, this is the exception that proves you're pointing at the early structural break, not this. So I framed it as unintentional, but like this is what I'm really talking about is the 1920s. When did it become intentional, right?
Right. Yeah.
1970s to the 90s, the financial lock-in. This is where stock markets and margins actually bite. Burl and Means documented the ownership from control split back in 1932. Friedman's 1970 Profits Are the Only Responsibility essay, and agency theory in the mid-1970s, marketing agency theory, ad agency theory, turned it into doctrine. The shareholder value and quarterly earnings culture of the 80s and 90s made it a treadmill, and now the person allocating capital is rewarded on the stock price and next quarter's margins, and quality improvement has a long, uncertain payback, while marketing spend has a short, measurable one. So the money systematically drains from making it better toward looking better now. This is the most literal version of the pressure you named, and it doesn't invent manipulation so much as make it compulsory. One analytical note that sharpens all of this: manipulation colonizes credence goods first and hardest, things the buyer can't verify before purchase or ever. Patent medicine then, supplements and finance, and much of B2B SaaS now, where the customer can quickly tell if it works. The honesty loop partially survives even at scale. This is like the tomatoes that are ripe stacked on top. You can pick up a tomato and be like, this is ugly. I don't want the fourth one stacked underneath here, but I need 4 tomatoes, right? Where they can't, presentation runs unchecked. That's the real dividing line more than any date. Committing, if you're forcing 1 point, I put 65%. I'm not forcing 1 point, so we'll just skip that. Tell that flips it, which press do you think is primary? Okay, so tell me, how does? Okay, so actually, let me get this straight, and you tell me if I'm wrong, because I'm gonna type this, and you tell me if you think I'm incorrect with my theory. So what I take away from this is that beginning in the 1920s, manipulation through marketing became almost a necessity for a career in marketing. Is that fair?
Yeah.
Okay. Well, it said, all right, I'd push
Well,
back
we're
on
going to see
that.
whether it's fair or not. We're going to see the answer. So
Yeah.
I'd push back on that. Be careful.
There's an answer of what you said that's true and a version that's overstated, and the difference matters. The overstated part is necessity for a career. That's probably true. That's too strong, and here's the strongest counter to it. The 1920s codified manipulation as available and prestigious, not as required. 2 of the most successful figures of exactly that era prove it. Claude Hopkins, whom I cited as a manipulation pioneer, actually preached the opposite half the time. His whole method was measured response, test everything, and sampling. And David Ogilvy, a generation later, built one of the most successful careers in the field on the flat conviction that the consumer isn't a moron, and that a great campaign that sells a bad product just kills the bad product faster. I agree with Ogilvy on that, by the way. So the historical record has counterexamples with too much success to wave away. Manipulation became a dominant tool, not a union card. Now the part of your takeaway that survives, and it's the sharper claim. What the 1920s actually made near mandatory wasn't manipulation. It was fluency and persuasion detached from function. After Bernays, you could no longer have a marketing career while insisting that your job was only to convey what the product does. The frame permanently expanded to include desire, symbol, identity, and emotion. And here's the trap in that. Those exact tools are value neutral. The same technique that attaches an unearned feeling to a bad product attaches a deserved feeling to a good one that would otherwise sit unnoticed on the shelf. Persuasion beyond function is genuinely necessary. It's also genuinely the raw material of manipulation. They're the same muscle, so that's why your instinct isn't wrong so much as it's collapsing two things that ride together. So the honest correction, the 1920s didn't make manipulation necessary for a marketing career. It made the capacity to manipulate necessary. So you had to be able to manipulate to have a job, is what I'm hearing from this.
Yeah.
You didn't have to manipulate, but you had to be capable of manipulation. Because that capacity is inseparable from the capacity to persuade at all, which relocates the question, et cetera, et cetera. Okay, so how did all of this change with social media? Now we're moving to more of the present, right? What do you think so far? Am I crazy?
No, I mean, it's an interesting exercise to dig into this topic. Like, what is it? What does it do? What do people want it to do? I mean, that's yeah. I mean, yeah. When you start really digging into it, the idea of manipulation, how do people feel about that? It's kind of like the old adage that people always say, "Well, I'm not impacted by marketing," yet we all know that people are. You know,
Sure, I am.
yeah.
We
It's
all
like
are. Yeah.
people say, I don't pay attention to those ads. That doesn't do anything for me. Yet, you know they are. You absolutely know they are, and so it happens. That's why that's part of it. And there's ethical and less ethical marketing as well. So it usually the less ethical is what gets people torqued up about being manipulated. But even the most ethical marketer is still doing that to a degree. You're trying to convince someone to buy your product, your service, or whatever, and in order to do that, you have to do more than just inform them.
All right, so social media, the strongest counter to any it got worse story, and I'd have to lead with it because it's genuinely powerful, is that social media restored the feedback loop that died in the 1880s. Sort of. The original version of social media for sure did that, right? Before the algorithms in 2011, et cetera, et cetera. So I'm going to put that in here, right? We'll leave that for later. The thing that disciplined honesty for all of pre-industrial history was the vouching shopkeeper and the small world reputation that made lying self-defeating. Distance killed it. Social media brought it back at planetary scale. Reviews, ratings, word of mouth, the founder answerable in their replies, the direct-to-consumer brand that lives or dies by what customers say publicly. A bad product now gets exposed in hours instead of never. Anyone can reach a market without a gate-kept ad budget. On this reading, social media is the most accountable marketing environment ever built, the first genuine recreation of small world trust since scale severed it. That argument is not a straw man, and I'll come back to why it's half right. But here's what it misses, and it's a phase change, not an acceleration of anything we've discussed. In every prior era, even Bernays, even the patent medicine con, there was a product on the far end of the transaction that the buyer actually wanted, and the marketer guessed at persuasion and then waited to see if it worked. Social media did two categorically new things to that. First, the loop closed on itself. For the entire history of marketing, persuasion and its measurement were separate acts, often separated by months. The platform fused them. The same channel that delivers the message measures its effect on you in real time and re-optimizes instantly. Bernays engineered desire by intuition. The platform A/B tests 1,000 variants against your actual behavior and keeps the winner. That's the manipulation muscle we discussed, the value-neutral persuasion tool, but for the first time equipped with a closed empirical feedback loop. And crucially, the metric that loop optimizes for is engagement, which is not the sale and definitely not your well-being. It's empirically decoupled from your interest, and worse, the things that hold your attention best: outrage, anxiety, social comparison, internet reward, and often work better the worse they are for you. The optimization target moved from make the sale, at least aligned with you wanting the thing, to hold the attention, actively orthogonal to you, and it's being pursued with a measurement apparatus no prior marketer ever possessed. Second, the user became the product, et cetera, et cetera. Now back to why the optimistic story is only half right, and this is where I commit. Social media didn't uniformly restore or destroy the honesty loop. It bifurcated along exactly the credence good line I flagged earlier. For a verifiable product, something you can use and review, accountability generally came back, et cetera. Restored trust, committing, the tail that flips it. Just give me a summary. Natural determinants of the SARC, and I'll say it plainly. The closed loop's final form is algorithmic and now generative, persuasion that isn't measured, and re-optimize what they thought. But isn't all this constant optimizing and tweaking and manipulating and adjusting and A/B testing just kind of gross? I just want to see what it says. I think it is. I think it's gross. I think if you have a good product, and many, many people do in the outdoor hospitality industry, right? Many people have a great product and just don't understand how to market it the correct way. And those people aren't even manipulating, they're just underutilizing the beauty that they have, right?
Mm-hmm.
And so, but I just think this whole idea of, like, especially with AI now as a tool for marketers, has just become gross. I don't ever want to improve my product. I just want to spin it as quickly as I can to get as many people as I can in here as long as I can, right? So yes, on the first part, it's a sharper correction than a caveat because it fixes a real sloppiness in what I said. And that was the social media restored it because, and I said for the podcast, people, arguably this is the original versus social media, not the algorithm control now. I collapsed two different things under social media. The chronological version genuinely did restore the loop. Did, right? YouTube was great in the beginning. Facebook was good in the beginning, etc. The chronological version restored the loop. Reverse chronological feeds, you saw what people you chose to follow posted, and reach was roughly earned by whether people actually valued the thing. That's the vouching shopkeeper mechanism rebuilt, distributed, mostly honest, and structurally accountable. The algorithmic feed did not extend that, it inverted it. Once the machine decides what you see based on predicted engagement rather than your stated choices, the loop stops disciplining honesty and starts disciplining attention capture, the exact opposite selection pressure. So it's not that social media restored the loop and then got manipulative. It's that one architecture restored it and a second architecture, wearing the same name, quietly killed it again and kept the reputation of the first. The optimistic story I steelmanned is describing a system that substantially no longer exists for most users. You caught a genuine equivocation, not a nuance. On the second question, I'm going to resist the easy agreement because gross is doing something interesting, and I don't think it's only aesthetic distaste. The strongest case that isn't gross, A/B testing in itself is just structured listening. A restaurant tweaking a dish based on what plates come back empty is doing the same thing. Okay, that's fair. And we call that craft and even respect, that's fair. I agree with that.
Mm-hmm. Yep.
Finding out what actually works instead of what you assume works is intellectual honesty, arguably more honest than the auteur who insists on his vision and ignores whether it lands. Removing friction from a sign-up flow, testing whether a headline is clear, a lot of optimization genuinely serves the user. On its face, measuring reality and responding to it is the opposite of manipulation. So the grossness isn't in the testing, it has to be located precisely, where the feeling is just vague technophobia. I think it sits in three specific places. The target, optimizing a thing toward being better and optimizing a thing toward being harder to leave, use the identical method and are morally opposite. Testing which onboarding is clear serves you. Testing which variable reward schedule keeps you scrolling past the point you wanted to stop serves the metric against you. The asymmetry, which is the part of demand, when one side runs 1,000 tested variants against millions of people. the manufactured spontaneity, so committing, okay. But let's start talking in plain English and not all your fancy words just for the podcast. I'm talking about not ever improving product. Okay. So I said for the podcast people, let's start talking in plain English and not all your fancy words. I'm talking about not ever improving the product, just the marketing of it. That's what I feel most marketing is in 2026, especially with the advent of AI. Fair, plain version, what you're describing is real and has a plain name, pouring the money into how the thing looks instead of what the thing is. And your gut that it's gotten worse in 2026 is pointing at something true, but let me say the true part precisely so it's useful and not just a mood. Why it drifts that way in one sentence. Making the product better is slow, expensive, and might not work, while making the marketing better is fast, cheap, and you can measure it by Friday. So the money walks toward the marketing. Nobody has to be evil for that to happen. It's just water running downhill. AI tilted the hill harder. Before, even cranking out marketing had a cost. You had to pay writers, designers, editors, and people. That cost was a small break. It meant some effort went into the product just because faking it wasn't free either. AI took the cost of making more marketing to basically zero. You can now generate 10,000 versions of the pitch for the price of a coffee, but making the actual product better costs exactly what it always did. So the gap between cheap to fake it and expensive to fix it is the widest it has ever been. That's the real thing under your feeling. It's not that people got greedier in 2026, it's that the cheap option got 100 times cheaper and the honest option didn't move. What do you think about that before we keep going?
Yeah, no, I agree.
Here's where I push back though, because I don't think most marketing is now pure marketing over product is quite right. And the exception tells you where the rot actually is. It's split. If you sell something people can check, a mattress, a drill, a campground someone stays at and reviews, you can market all you want, but if the thing is junk, people say so, publicly, fast, and the marketing eventually stops saving you. The honest loop still works there. It's slower than it should be. Marketing can outrun reality for a while, but it catches up. Where all marketing, no product runs wild is the stuff people can't easily check or can't check until it's too late. Supplements, a lot of software courses and coaching, et cetera, et cetera. Okay. So then my question here is like, and this is just my brain, right? I'm not saying this is the way it should work. So if you want to input something in here, Scott, you let me know. My thing is, okay, but if we have a near endless supply of users on social media, email marketing, TV, radio, etc., we can replace the people who have bad with new people, and even if they have bad experiences, we can just find someone else. Rinse and repeat. That's the part AI enables further, along with the traditional manipulation, or whatever we want to call it, avoids some accountability for the product. So, there's something I was thinking about as reading this out. Using it. Supplements, honestly, works slowly and arcane. Okay. So let's just leave it right there. Okay, so I said, for those of you who aren't here, okay, but if I have a near endless supply of users on social media, email marketing, TV, radio, we can replace the people we have bad who have bad experiences with new people, and even if they have bad experiences, we can find someone else. Rinse and repeat, that's the part AI enables further, along with the traditional manipulation, or whatever we're going to call it. I know what else I was going to say now, right? But and what about people who don't need the thing we want, or want the thing we have, but we manipulated into spending their money through marketing? Is that ethical? So let's go on, find out. Okay. So it says, yeah, you just described the actual business model, and it's uglier than marketing over product because it's a step past it. Let me say it straight and then tell you the one place it breaks, because where it breaks is the whole game. What you're describing is a plain name, burn and churn. You're not trying to keep anyone. You're treating customers as a supply you consume. Get them in, get the money, don't much care that they leave unhappy because there's a fresh batch behind them. Bad reviews don't matter if you can outrun them with new faces who haven't heard yet. And again, we're not saying that people are doing this on purpose, right? Some people.
Right.
Most 99% of people aren't. And you're right, this is old. Here's the honest part. AI and modern reach made it worse. Finding experts got cheaper. Now the break. The model only works when two conditions hold. First, it needs the pool to be effectively endless and forgetful. Second, this is the one that actually ends these businesses. Burn and churn only pencils out when getting a new customer is cheap. The whole model spend is spend X to acquire, make more than X before they leave. Never mind the repeat business you're torching. But every unhappy customer you burn raises the cost of the next one. So the plain verdict, et cetera, et cetera. And then I said, but the genuinely dark part I'm circulating, and I'll name it so it's not lurking. AI might lengthen the fuse faster than the group chat shortens it. That's the real open question. Not whether burn and churn is gross, it is, or whether it works, it does for a while. But which side is winning the race right now? The cost of faking accountability falling versus the speed of customers warning each other rising. I don't think that's settled in 2026. And I said, okay, what about people who don't need the thing that we want or want the thing we have, but we manipulated and are spending their money through marketing? Is that ethical? No, that one's not a close call, and I'm not going to manufacture balance where there isn't any. Strip the euphemism off of it. What you just described is the person didn't need it, didn't want it, and you engineered the wanting so they hand over money they'd otherwise have kept. That's not marketing landing on a real need. That's manufacturing a need that wasn't there to extract money. The plain word for taking someone's money by getting them to believe something that isn't true for them is closer to fraud than persuasion. And the only reason it doesn't get called out that is that it's done at scale legally with a marketing budget instead of a con man's pattern. So let me draw the clean line, because there's an honest version right next to it, and the whole ethic lives in that. Honest persuasion, the person would benefit or does want it. So again, this is a big sentence right here, right? The person would benefit, because almost every marketer you talk to who's marketing their product would tell you, of course, they would benefit from staying with me, right?
Right. Exactly.
Okay. Right. So that's holding a whole lot of water here, right? Or does want it, and they just don't know it exists or don't get why it's good. You're getting their attention and making the case, that's fine. Arguably, it's a service. The fruit vendor calling out that his fruit is ripe when it is ripe to someone who does want fruit. Nothing wrong there. What you described is the opposite on both axes. No underlying want, no underlying benefit. The want was installed by the marketing itself purely so money would move. The only party who comes out ahead is you. The customer is worse off, and again, debatable, right? But they spent money on a thing that does nothing for them, and the value you added was the illusion that made them do it. When the transaction only works because the other person believes something false about their own life and they're poor for it after, that's not a trade. Trade is supposed to leave both sides better. This leaves one side better by making the other side worse and hiding it. That fails the most basic test there is. Here's the test that cuts through all of it, and it's the one I'd actually hand you. Would they still be glad they bought it after the spell wears off? I think that entirely depends on the expectation.
Sure.
The marketing set and the product that it delivers.
Exactly. That's exactly. Because if your marketing is setting unrealistic expectations that you're not going to be able to deliver on, then that's where the imbalance comes in, and that's that short-term strategy, the churn and burn and churn, whichever way it goes. But if the, again, if you think of it just as the stay, that what you've done is you've communicated very clearly what your campground is, what you offer, how much fun they're going to have while they're there because of what you have, the services and amenities. They show up, they have a wonderful time. They don't even think about what they paid for their campsite, and they want to come back again. So now the campground owner made money off that guest. The guest had a wonderful time. There it is. That's balance.
Mm-hmm. So then the customer chose freely. So flatly manipulating someone who neither needs nor wants the thing into paying for it is not ethical. It's the clearest cut unethical thing in the entire conversation, and it's more damning now, not less. The one honest complication I'll leave you, and it's a real one. Almost nobody sits at the pure extraction end or the pure honesty end. Most real businesses are a mix. Some customers genuinely helped, some oversold, some who regret it. The ethical question in practice is rarely am I a saint or a con man, it's which way is the mix tilting and which way am I pushing it. A person who cares about this doesn't need every sale to be perfect. They need to know honestly whether they're moving the dial toward glad they bought it or toward got away with it, and to not lie to themselves about which one the money is rewarding. That self-honesty is the actual work. The ethics isn't hard to see here. It's hard to keep looking at it when the other direction pays better. And so I said, the quote, would they still be glad when it falls off? Expectations. And I said, right, I just found the crack in my own test, and it's a real one. Let me fix it rather than defend it. My glad they bought it test quietly assumes the person judges the product against reality. They don't. They judge it against whatever you told them to expect. And you're the one who set that expectation. So a marketer controls both sides of my test, the product and the yardstick it gets measured against, which means were they satisfied can be gamed from the expectation side without touching the product at all. That breaks the clean version of what I handed you. Good catch, let me rebuild it. Here's the thing you're pointing at, and it's sharper than did they regret it. Satisfaction is a gap, not a level. It's the distance between what you promised and what showed up, which means there are two completely different ways to make someone satisfied. Raise the product up to meet the promise, or lower the promise down to meet the product. And this is the ugly part. There's a third move you're really asking about. Raise the promise high enough to make the sale, or just accept the disappointment on the far side because you already have the money. That's the burn and churn expectation game. Oversell to close, under-deliver by design, eat the regret because there's a fresh batch coming, and your whole last few questions have been circling this, and this is the cleanest form. Here's the fuller version, blah, blah, blah. Okay, all right. So how does this get, I'll go positive here, right?
Okay.
This is where I'm going, is the positivity of it. I had just wade through the negativity of where marketing is right now. So how does this get better when we have our own personal AI agents who know us better than we know ourselves, cannot be influenced by email marketing or rounded buttons, corners, slogans, doctored photos, etc. Does it reset everything and force everyone to be honest about their tomatoes? Let's see what that said, because I think it does. What do you think?
Yes. Yep.
And I think this is the world that I'm excited to be a part of. This is the world that I want to do marketing in for campgrounds. And most campgrounds are on board with this, to be clear, right? I just don't think they understand how the perception of the consumer is impacted by all the things that their marketer does on their behalf that they might not even know about. All in the name of, to be clear, and this is not necessarily the marketer who's intentionally being manipulative either. All in the name of you telling the marketer that what you care about is statistics. How many clicks, how many impressions, how many conversions, how many whatever. That's all I care about. Just give me numbers. I want reach. I want engagement and likes and comments and shares. What the fuck are you talking about? You want a full campground. That's what you want. So stop demanding from the marketer that they deliver those things and start demanding that the marketer delivers a full campground. And if you truly have a good marketer who is working for you, then that marketer will tell you that you need a differentiated product or to change your expectations in order to market it correctly, which will lead to a full campground if you're willing to listen to them and provided other intangibles like the economy and everything else, right? And then you'll win in the end. But stop demanding all these vanity metrics and clicks and open rates and everything else from your marketer. And to be fair, like there's a whole nother existential problem of a marketing world that's existed for over 100 years. And most recently with social media, where these marketers literally cannot function without measurements and charts and graphs and reporting those things. They do have value, but they don't understand how to present that or do that or function in a world without that, right? So it's not going to change overnight. But anyway, so maybe, but not by itself, and the way it fails to reset is the most interesting part. So let me give you the honest version instead of the hopeful one. Oh boy, I tried to be positive. You remember this, Scott. The hopeful version is genuinely strong, and I'll say it fully because it's real. Look at this is me being positive. Note this in history. Every weapon we've talked about, the rounded buttons, the doctored photo, the manufactured urgency, the slogan, the expectation gap, is aimed at a human nervous system. An agent doesn't have one. It doesn't feel urgency. It doesn't get a warm feeling from the lifestyle photo. It reads the spec, checks the actual reviews, compares the real numbers, and can't be made to want. That's not a small upgrade. That's handing every buyer the thing the fruit vendor always had and they never did, the ability to see under the top layer of the pile. If that holds, it forces the whole game back onto the actual tomato, and it's the biggest honesty shock since the pre-industrial shopkeeper who knew you and your goods. So yeah, for a big chunk of the market, it really could reset it. I'm not going to pretend that's naive. It isn't. Now the 3 reasons it doesn't fully land in order of how much they matter. 1 is the manipulation doesn't die. It changes who it's aimed at. It stops targeting you and starts targeting your agent, which is fair, right?
Mm-hmm.
Everyone's scrambling to figure out how to be the thing AI recommends, feed the model, gain the data. The agent has different senses than you, but it still has senses, and anything with senses can be fed. So the arms race doesn't end, it relocates to a place you can't see happening. In some ways that's worse because at least you could feel the old manipulation working on you. You won't feel this one. 2, and this is the one that actually decides it, whose agent is it? Again, built by a company that sells ads or takes placement fees, which so we know this is going to be corrupted at some point, right?
Right.
Or has any reason to steer you, then the exact trap from a few turns back comes right back, 1 floor up. The user becomes the product again, an agent that quietly nudges you toward what pays it while feeling like it works for you is the con we've been circling this whole conversation, except now it's living inside the one thing you trusted to protect you from the con. 3, even if a perfect incorruptible agent that's 100% loyal to you only forces honesty about what it can check, and that drops us right back to the line that's running under this entire conversation, the verifiable stuff versus the stuff you can't verify. And the last point, when the agent forces everyone to compete on what it can measure, sellers optimize for the measurable, which means that real but unmeasurable qualities get starved. Picture it with your little tomatoes. Agents rank on price, size, shelf life, pesticide data, all checkable, and flavor, which is hard to put into a database, quietly stops mattering to the buying decision. You get a world optimized to win on the spec sheet, which is exactly how we already got the supermarket tomato. Bred for size and shipping and uniformity, tastes like wet paper. The honesty machine could force everyone to be honest about the measurable tomato, and in the same move, kill the good one. Okay. Here's where we'll almost wrap up here. We'll wrap up. Maybe on the tomato uniformity, but there are ways to measure taste, organic, soil, climate, location, farm practices, etc. And then finally, so if you are a campground owner, what are the top 10 things you focus on marketing wise for 20, 40, we'll just say 20 for the future of AI agents we all know is coming. Bullet points. So I said maybe on the tomato uniformly because there's ways to do that with soil, climate, location. You said you're right, you're overreached there. It strengthens your original hope. I did the lazy thing. I treated taste as a black box because you can't measure it standing in a store, but taste isn't magic. It has causes, and the causes are measurable. Variety, soil type, how ripe it was when it was picked, days since harvest. I think you get more data, right? So let me give you the corrected version. Good news, the unmeasurable last stream is smaller than I made it. Every one of those measurements is a new promise, which means a new place to lie, right? So then you get people manipulating data again, right? But I think AI will eventually be able to fix that. So then the last part is, and we'll close it out. So if you're a campground owner, what are the top 10 things you focus on marketing-wise for the future of AI agents we all know is coming? Structured data on everything obsessively. The agent doesn't read your pretty homepage, it reads the machine layer underneath. Site types, exact dimensions, hookup amps, pull-through versus backend, max rig length, pet policies, price by date. Facts. Facts. Not spin. Information. If it's not in the structured markup to an agent, it doesn't exist. Make availability and price machine readable in real time. Feed the verifiable taste of the place. This is harder, by the way. This is harder because your reservation systems in the campground industry are so far behind. They're so far behind this. Feed the verifiable taste of the place and not adjectives. Everything we just said about the tomato applies to you. Beautiful sites is a slogan an agent ignores. Actual measurable causes of quality it can use. Distance to the lake in meters, tree cover, site spacing, noise proximity to the highway, cell and Wi-Fi speed, water pressure, and dark sky rating. Turn your vibe into facts, and the agent can finally sell it for you. Not spin, facts.
Facts.
Own your review integrity, so get reviews. Nail the unglamorous factual accuracy. Wrong hours, wrong pet policy, wrong gate code process, a closed amenity still listed. Every mismatch between what you publish and what the guest finds is an expectation gap the agent remembers and penalizes forever.
And it can be cumulative.
Agents punish inconsistency harder than humans do. Get your data consistent across every source. Build for the agent's actual question, not keywords. People will stop typing RV park near Moab and start telling their agent, find me a quiet site for a 34-foot fifth wheel, full hookups near hiking under $70, dog friendly next Thursday. Make sure every one of those filterable facts is explicit and answerable. So what that means is you say on your website somewhere that you appeal to 30 to 40 foot RV fifth wheels in this site, right? You have sites with full hookups. They are near hiking trails. They are under $70. They are dog friendly. This is a problem because of your rate, your online booking again, right? It needs to live somewhere outside of that when it's available. Make yourself agent bookable, not just agent findable. Again, that's a whole, you can't really do that without a modern reservation system in the industry. Hopefully,
Right.
one will come along. Segment the facts by who's asking. The same site is a different product to a family, a remote worker, a snowbird, or a tenter. Publish the facts on each segment's agent filters on. Playground and family bathrooms for one, upload speed and desk for another, mobile rate and mail handling for another. You're not writing copy for people anymore. You're supplying filter matches for their agents. And protect the human judgment layer that agents can't fully verify and make it real. When the checkable stuff is commoditized, the deciding edge is the genuinely unmeasurable, how the place feels, the host, the community, the thing people drive past 3 closer parks to get to. Agents will surface it through proxies, repeat booking rate, review language, return guests. So the play isn't to fake it. It's to be so good at it that the measurable proxies of it show up honestly. The thread in all 10 is an agent-driven market rewards the operator whose real quality is fully exposed in machine-readable facts and quietly destroys the one who was surviving on prettier photos than product. For a genuinely good campground, that's the best news in a decade. For a mediocre one hiding behind good marketing, it's the fuse we talked about, and it's already lit. Final thoughts?
No, I like it. I like the structure, the idea of how an agent might work and how it could work for a campground owner. I would advise anyone to look into that further, as a because it makes so much sense that kind of building up to the whole idea of marketing, what it is, what it isn't, and how you use it. The idea of setting expectations by putting in, you kept saying the facts and so on. That's what's going to truly market your campground and set your expectations. Because ultimately, we are in hospitality still. We are providing the service, and that's what people need to know.
I mean, what you need to understand as the campground owner is this. You have in most cases, a good product. If you don't, then you know how to get there if you want to get there. Okay. And that product has an audience of people who want to have that product. They do. They want to come camp with you. They want to enjoy nature. They want outdoors. They want to be by the river. They want to see your landscaping. They want to chill outside. They want to look at the stars. They want to do all those things, right? There's never been a higher demand for it before. Can I say that, Scott? Is that fair? There's never been a higher demand for the outside before, or at least it's flat for sure, right?
Mhm.
And so it's not a question of you needing to trick or manipulate or edit photos or doctor sayings or hire a marketer that spends 6 hours trying to, I don't know, tell a story through email marketing or Facebook ads or Google ads to trick somebody into coming to your property or not setting expectations correctly, because your park, if you run a good park, can be full. Are there exceptions when the economy is bad? Sure. But still, in many cases, because of the lack of people that are focusing on their niches, if you're able to drill down into yours, you can be full even through bad economic times. So you should be super happy that AI is going to take us here, because what it's going to do, provided you have built a niche campground that is targeted at an audience that is differentiated with a unique experience, like Scott and I have been talking about on the show for a year and a half now.
It seems,
Whatever,
yeah, yep,
right?
yep.
Differentiated experience. What that is going to do is it's going to allow each AI agent that is personalized to its person to be able to surface the exact campground that that person wants to stay at. And if you've built an experience that's built on the audience, that's tangible, that's correct demographic, that has been thought and studied and actually had love and care put into it, there's enough people out there to fill your campground. And instead of you going out and manipulating, air quotes, right, through marketing, you're just going to be delivered to the human who will love you. And all of a sudden, if you run a good operation with thought and care, you just win. And that's what I'm interested in. So thank you
Excellent.
for joining us for another episode of Outwired. That was our longest episode in a long time, man.
I think, yeah.
Thanks for joining us for another episode of Outwired. We will see you next week. Until then, see you later.